Hey everybody, welcome back to the Thinking Crypto channel. I've got big updates for you guys. We're going to talk about Bitcoin's price and what's the next move. JPMorgan is recommending allocating 1% of your assets into Bitcoin. And also the SEC has released some major updates that I want to review with you guys. Before we get into it, go ahead and hit that thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, heads up, my interview with Chris Giancarlo, the former chair at the CFTC, the gentleman who's leading the digital dollar initiative and also came out in last year and said XRP is not a security. I will be interviewing him this coming week. So if you have questions, please leave them in the comment section and be sure you hit that notification bell so you are alerted when new videos go live. Guys, right now, nothing spectacular happening in the market because we are in a correction phase and markets move in phases and in cycles. So right now, Bitcoin is at $45,605. And the alts, of course, as I always talk about, move with Bitcoin. Bitcoin is the rising tide that lifts all boats. Cardano is performing really well. It's at $1.21. So looking really good there. But overall, we're still in a correction phase. And if you've been subscribed to this channel, we've been talking about these market cycles. You guys know I don't day trade, but I do swing trade over months. I'm more of a long-term hodler. So I am just holding my bags for higher prices. I am not in the day-to-day, but it's good to understand where Bitcoin's going to move next as far as a price point. So look, we could go down to honestly around 40,000 and bounce off there. Or we build some support levels at the $45,000, $46,000 level. You know, we go a bit up and down, sideways, consolidate, and then we have our bounce up to, I think, 65 to 70,000. We'll have to wait and see. You know, guys like Max Kaiser have said $77,000 is in play. But, you know, it's all market cycles. One thing we can certainly be assured of is that higher prices are coming because we are in a bull market. And here you can see, you know, in this respective technical chart that was done by a Bitcoin trader shows that we can have a pretty epic bounce, right? And the respective waves and work our way up to the 70s. So that's coming. It's just a matter of patience and understanding how market cycles will work. Many folks do not. So I hope you guys get that and it really resonates with you. Now, we're still early. Bitcoin doesn't have the full adoption and crypto doesn't have the full adoption that other respective assets do. So that's why we are in a position to make a significant return. Here, Cameron Winklevoss, one of the Winklevoss twins, tweeted the following, the sentiments that I agree with. If you are reading this, you are early to Bitcoin. How do I know? Imagine thinking you were late to Amazon in 2010. It was trading at $133. Yes, you missed $10 a decade before, but it will go on to hit $3,500 for a 26x gain. Don't fixate on the past, focus on the future potential. And absolutely, you need to understand where we are in the timeline and how early we are in the adoption curve, right? And I think we still have lots more adoption to happen, more companies to add Bitcoin to their balance sheet. Look, I've interviewed Michael Saylor, heard it from the horse's mouth, and then Elon went and added Bitcoin to his balance sheet, or Tesla's balance sheet. I've also interviewed the mayor of Miami, and he's looking to allocate some of the city's treasury reserves in Bitcoin. So these are facts, guys, and these things are on the horizon. And we're going to see, as I covered in yesterday's video, just massive FOMO. And as these crypto companies and exchanges like Coinbase go public, you're just going to see more demand for crypto, right? And Dan Moorhead, who I've interviewed on my channel, he has he has a price prediction of $115,000 by August, tweeted an update here at $46,500. Bitcoin is just back to its 10-year exponential trend price of $46,537 today. Bitcoin price still probably has a huge move ahead of it. In previous bull cycles, Bitcoin price peaked at 1,580% and 669% above fair value. This is both in 2013 and 2017. So essentially he's saying we got more ways to go when you look at the data, and he's a macro level guy, right? If you haven't seen my interview with him, definitely check it out. A very smart man, and he's not one of the loudest in the crypto market and so forth, but he's been in Bitcoin since the early days of 2013. So he's looking at things macro level. Now, this is bullish news. I know some folks may say, well, this is a bit bearish, but remember how you got to bring this back in context of how early we are, right? JPMorgan note to clients endorses 1% allocation to Bitcoin as a hedge. How times have changed. Jamie Dimon in 2017 called Bitcoin a fraud. Don't talk to me about it. So Bitcoin would serve as a hedge against fluctuations in traditional assets. And we're seeing quite a bit of fluctuations, guys. And the money printing that's coming will debase your savings. It will devalue it. You won't have the same purchasing power. So strategists at Wall Street banking giant JPMorgan have suggested that a 1% portfolio allocation to Bitcoin would serve as a hedge against fluctuations in traditional assets such as stocks, bonds, and commodities. A small percentage allocation was advised to mitigate the risk of any large downturns in the digital assets value. Bitcoin has declined 20% since its all-time high of over $58,000 on February 21st, but it is up 60% since the beginning of the year. So you got to zoom out. You cannot be looking at this hourly, daily, weekly. You got to zoom out, right? And that's pretty clear here. So according to Bloomberg, JPM strategists Joyce Chang and Amy Ho stated in a note to clients, in a multi-asset portfolio, investors can likely add up to 1% of their allocation to cryptocurrencies in order to achieve any efficiency gain in the overall risk-adjusted returns of the portfolio. So they're advocating for this. I believe they've loaded their bags up. I believe it was smoke and mirrors from Jamie Dimon years ago, and all the Wall Streeters are here. Guys, if you just saw my interview with Anthony Scaramucci, he gives you some insight there. We talk about how the Tether Bitfinex settlement removes one of the risk elements that was preventing some folks entering into the market. So things are going to progress. We're going to see more hedge funds and billionaires and Wall Streeters and financial institutions capitulate. And JP Morgan here, I think they see the writing on the wall. If they don't get involved, they will become a blockbuster of the financial world. Obviously, Blockbuster never innovated the internet. Netflix came along and killed it. So keep that in mind. And here we got an update from the SEC. And remember, I'm interviewing Hester Peirce, SEC's Commissioner Hester Peirce, in a couple of weeks. So make sure you are subscribed, guys, with the notification bell. She tweeted, SEC's exam division released a risk alert on digital assets. I welcome your feedback. Well, what is this? Well, the risk alert seemed to take particular aim at broker-dealers who have been inadequate in their AML compliance. So AML is anti-money laundering. Let me give you some more details here. Targeted toward investment advisors, broker-dealers, exchanges, and transfer agents, this risk alert provided a broad list of specific procedural, bookkeeping, and advisory steps the division will be expecting from securities companies in future examinations. Here's a quote. As more securities industry participants seek to engage in digital asset related activities, this risk alert provides transparency about areas of focus for the division's future examinations, the office wrote. Investment advisors should be aware of risk associated with forks and airdrops, and the division will be reviewing advisors' fulfillment of their fiduciary duty with respect to investment advice, a comment presumably related to disclosing the risks associated with crypto. So it seems like it's just regulating the people who will be pitching crypto or selling crypto or whatever it is, broker dealers and so forth. So investment custodians, meanwhile, should have continuity plans in situations where key executives have access to private keys, and the division will be examining private key management going forward. So obviously, some of these things are common sense here. So nothing necessarily bad, but obviously the SEC does need to get its act together, and I'm going to talk to Hester Peirce about that. I think she's forward-thinking. She has put out crypto regulations, but it's getting the other folks. We know Jay Clayton is gone. Gary Gensler's coming in, so I think we're going to see some positive crypto regulations and movements this year. So among the most thorough sections is guidance around anti-money laundering considerations for broker-dealers, which the division seemed to imply has been a point of failure for some institutions. Certain pseudonymous aspects of distributed ledger technology present unique challenges to the robust implementation of an AML program, the division wrote. Here's a quote. The staff has observed broker-dealer AML programs that have not consistently addressed or implemented routine searches, or to the extent they implemented routine searches, have not updated those searches to check against specially designated nationals lists maintained by the Office of Foreign Assets Control at the U.S. Department of Treasury. So I think it's just, once again, KYC, AML, and this is part of the infrastructure build out for crypto. But the SEC has to do more. Obviously, we know about the Ripple lawsuit. We know, I feel that lawsuit is BS, and they need to be more forward-thinking here. The 80-year-old Howey test cannot be used against digital assets and crypto in the market. They've got to fix this. So anyway, guys, interesting. You guys can read through the full details here and certainly tweet at Hester, and I will read through it in more detail and ask her questions about it on my interview in a couple weeks. Now, finally, I've mentioned to you guys that I'm exploring Energy Web and looking to add it to my portfolio. I'm also in contact with the CEO of Energy Web to set up an interview. That is being scheduled right now. And if I do add Energy Web to my portfolio, I will let you guys know. But here's an interesting update from Jesse Morris, who's the Chief Commercial Officer at Energy Web. He said staking, we call it escrow, is coming to Energy Web via the Energy Web token. I like that, guys. You earn rewards, right? In some ways, this model is very similar to other staking models, example Polkadot, but in others, it is completely unique. Here's a preview thread on how it works. So new utility nodes will come online separate from Energy Web chain validator nodes. The new nodes deliver services like decentralized key management, data storage, and messaging to developers. These services are critical for energy majors and consumers to adopt Energy Web tech at scale. Utility nodes need to stake Energy Web token in order to offer services. So there it is. The stake acts as an incentive for those nodes to maintain quality service levels. Its service levels decrease according to agents. Think fishermen a la Polkadot. There is a slashing mechanism that kicks in. The broader Energy Web token community can participate by either A, standing up utility nodes, and or B, staking Energy Web token against other utility nodes. Any legal organization that goes through a KYC process, not just Energy Web members, can host utility nodes. So I like this, guys. And he says here, utility nodes can choose to accept staked Energy Web tokens from any Energy Web token holder at their discretion. So this is effectively a delegated proof of stake system whereby any Energy Web token holder can choose from a list of utility nodes who they want to stake against. I like it. And I have to do a video. I know it's overdue. How I'm going to be earning rewards and passive income via staking, right? Especially in the bear market. When we get out of the bull market, how do we keep making money? And I'll be updating you guys on that. I'll do a full breakdown video. So I have not added Energy Web to my portfolio, but I'm thinking of, especially in this dip, to buy up some. So I will let you guys know, as always. Those of you who are channel members have direct access to my portfolio. And of course, if you have questions for the CEO of Energy Web, leave them in the comment section and I will ask him those questions. And once the interview is scheduled, I'll let you guys know when to anticipate the interview going live. So guys, what do you think about this news? Do you agree with me as far as Bitcoin? Look, we could go to 40 and bounce off that, or bounce off the 45, 46 support level and go upwards to 65 to 70 or higher, right? And when we see the likes of JPMorgan telling people to buy and we're in a dip, I think we're going to see a lot of folks come out in the next couple months saying, we bought Bitcoin, we're adding Bitcoin to our balance sheet, and so on and so forth. So guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, make sure you got the notification bell turned on, and I'll talk to you all later.